back to Primary Source China Investment. This week we're on show C4. And what we're going to be talking about is Biden's trip to Asia, and specifically his meeting with Xi Jinping on Sunday, I guess, in Bali. So, peng.guo, what's your thought about the agenda items? You know, if you have an elevator pitch here for Xi and Biden, what's on the agenda?
That's honestly, I have no idea. But I bet both countries probably or the globals pay close attention to these meetings. It's definitely a good time for the political people to show their value to the entire global economy. So I think in the past couple of years, we suffer a lot, no matter the virus as well as the war, and there's a lot of the conflicts and the fight. It's everywhere. The only thing is, the peace brings money. And you see the fight everywhere. The only conclusion is not everybody get a pool, or maybe a few people get rich, but most of the people definitely get pool.
Most people.
That's the
people
quickest
suffer.
way.
Yeah.
Yeah.
You know, one of the things I was going over was this is really the first time where there's no ask. A lot of times when we're looking as investors or we're looking as business developers, when these high-level meetings take place, there's always an ask. And for the past quarter of a century, every time the leader of the US and the leader of China have met, there's always been some kind of policy or ask that's on the table. And, this started in the early 90s when it was over most favored nation status and human rights. And then WTO was on the table, and the six-party talks with North Korea, and trade deficits and dumping and climate and South China Seas. This time, it doesn't look like there's any one specific thing. That's why when I threw it to you, you're like, I really have no idea.
That's right. I think everybody can see the relationship between China and the United States get worse in the past couple of years. I think this meeting is really just like the stop of the worst. That's the first thing. I don't expect anything get better, but definitely we should just stop the worst right now.
It's a stop loss order.
That's exactly like the stock market. First is stop loss and don't drop again.
Yeah, we try to put a floor in here.
Talk about probably need a long term and to get recover slowly, and obviously there's a lot of bumping on the way, I bet.
Yeah,
there's another reason is I just see the summary paper for the chip war during the past couple of years. So the biggest supplier in the United States take the sections to the big customer for China.
Yeah.
And after the 2 or 3 years, we see $3 trillion market value get lost.
Right.
The whole industry face the situations right now.
Right. You have the two biggest economies, coming to swords over a number of economic issues. And, there's an old American proverb that says, when you fly 8,000 miles to China, the Chinese know you're not going to want to leave empty-handed. So they hold all the negotiating cards. It's been said that, China has the greatest home field advantage when it comes to negotiation. But I think for this trip, the script has flipped a bit, because Biden is going to meet Xi and really ask for nothing. In fact, it may be Xi who's asking for something. He probably won't. But practically speaking, those tariffs that Trump put in place are still in place.
I don't think China spent too much time on that, because they're all dealing with internal COVID problems. So that's a lot of the policy change, and that's whatever COVID zero policies cause a lot of the problems in the daily life. They probably have no time, no energy to think about those kind of things at all.
Right, and we've talked a lot about this show about more of a domestic policy and more domestic focus from Beijing, and this is actually what's happening on the ground. There needs to be a much more domestic focus. And Xi has demonstrated he's willing to create different spheres of influence also. And, that doesn't necessarily depend on one trading partner, because, China is the largest trading partner for most of the world. So that's not,
yeah,
that's
I
not
hope
going to go
they
well.
just screen out all the unnecessary conflicts or fights and try to at least just a stop loss right now, give some positive confidence to the market, and then you will see the market will reflect very quickly.
Absolutely, there's room for that. I don't know if investors are looking at China-US relations that way. And let me try to be a little bit more specific. In the past, we've always believed that trade continues to increase, cooperation continues to increase, and positive returns will come from all of that working together. And now we've definitely seen that there is some splitting, some bifurcation, some separation, however you want to define that. And what does that mean going forward? I think for investors and allocators looking to China, they have to break out the macro issue from the micro issue. And what that means in terms of looking at investment opportunities is start from the top, but also have to work from the bottom. So the policy is going to dictate. And as we're seeing, China is looking more internally. So those internally focused companies are going to benefit.
That's right. That's always due in the emerging market investment. So you have to start it at the micro level. So otherwise, most of the risk come from the macro risk. And obviously, for each individual industry, yeah, you have to research like the relationship between the micro and the macro for the sectors level.
Right. I think specifically there's some areas where some sectors that have traditionally been doing very well. You know, if you look at China tech overseas, you look at these China car companies, but those companies have been wrecked in the last year. I don't think those companies do better going forward. I think those companies that are focused on the mainland, you know, the Chinese companies focused on the mainland customers and clients are going to do better than those that have aspirations for going overseas or those that have been listed overseas in the past.
I totally agree. So this sector's level research and the forecast is essential for the investment success because all your allocation decisions are based on the at least the sex levels research. I think that those kind of risks can be diversified. But the majority of the returns is still from the asset allocation that's match the traditional investment theory.
Exactly. So China is not different when it comes to, you know, finance theory.
Yeah, I think China actually is quite clear. So probably I think they have 5 or 6 sectors they have advantage.
Yeah.
And probably 5 to 10 sectors they have a disadvantage. So that might be give the product chain might be one sector, might be multiple sector get covered. So it should be adjust the allocations ideal from the different perspective.
Well, we've talked about one sector a lot on this show, which is the energy sector, right? Because you know, if you want to be in the energy business in China, you have to be a large state-run enterprise. Foreign, you know, Exxon is not in China. You know, you can't be an oil exploration, you can't be a fracker, you can't be a foreign firm in this industry. So there may be individual companies that do better or worse relatively, but long term, that's an industry and a sector that's going to remain very close to policy in Beijing.
I think right now is more research is like the energy sector, right? They are more expanded to the upstream, downstream, and all the related sector. So put all those things together into the one page, you will get a very good pictures and how this looks like over the time.
And another sector that is largely excluded from foreign investment is healthcare.
Healthcare is definitely a very important sector. We reorganize China as well as the Hong Kong, all the China-related companies to the different sectors. So based on what's existing in the healthcare, it's really from the fundamentals perspective. So totally should be like the 23 small subsectors in the entire industry.
Right.
So those kind of things is because China get an aged population, 70% of the medical expense came from the people over the 60s, even for the one person's lifetime. So most you have to
First 2
spend
years and
money
last 2
with
years.
old.
Yeah, that's when the
Yeah,
expense comes. First 2 years and last 2 years. So
yeah, just always save more for
yeah,
the future.
those foreign investors, pensions, endowments, universities, those kind of things, have to allocate to China. Their mandate is invest to China or allocate to China. Those are the kind of places that they should be looking going forward. It's not some blind allocation to all of the stocks that are listed all over the globe. Well, we're going to be looking for the press releases from both sides after this sidebar or formal meeting between Biden and Xi, and we'll do the post-mortem after this weekend or after on Monday or Tuesday, something like that. So we'll look out for that. And with that, we're going to wrap up show C4. Thanks for tuning in.
Thank you.